Yeah, Dangote Cement. These are their H1 results. Let's have year 2020. So if you look at the headline side of things, you see that revenue grew by 21.4%. Then you see that operating profit before tax also grew. Then their debt was halved, like their debt was cut off by quarter. That's by half. That means they paid off. But then on the surface, a dominant franchise is accelerating, franchise group. But there are some things that complicates the issue. So let's dive in. If you're watching for the very first time, these are best invest. So we break down these earnings for you. First of all, you get them fast on X already. Then we make our time to do the YouTube video. So that's why we are supposed to be following us on X. That is Halved_invest. So this is it. Then if you get here, this is how it works. This is the price chart. So we have 4 graphics we are going to explain in detail. The price chart, the income statements, balance sheet, and then cash flow. Then after that, you see the segments of the public research, which is what happened, what we found out, the evidence to back up what we found out, and places going forward. So you can see people, some comments and stuff like that. So like always, let's now dive in. So let's go to the graphics side of things. Okay, so for the graphics, first of all, we start with the price chart. What is the market pricing at a time? You see where the price started actually when it was started being tracked by Trading View. So you can see what price looked like at the time. Price was sub 100 naira. Naturally, as things are going up, that's just sometimes they will tell you to stay invested. That over time your money grows. So from sub 100, you see the swings. COVID hits here, recovery, stuff like that went up in 23. Then FX devaluation, price came down, found its footing, went to the stabilization. FX took out this high, went up, rallied close to 1,200, dropped back below 1,000, propped up back again, and now we are in 1,034 naira. So that is it, what the price has done. Then let's look at the income statement. Okay, so this is the income statement of course revenue. They made a revenue of over 2.5 trillion. So this format of income statement, we just tried it out. So after this, you won't see it again because we found out that our readers said they don't like this format. So we pivoted back to the old format. So this format was like, this is H1 2021. These are the margins. They're adding the margins in between. Then finally, the comparison was now far off. But let's not say, if you love it, okay, it is good, but we are not going to adopt it again. We are using the old pattern we use. So you see that revenue grew, then operating profit also grew by 30%. That's the middle line. Then the bottom line also grew. EPX expanded. Then if you look at the margins, everything is looking up. Everything is looking up. Even the coverage ratio, everything is looking up. So let's go to the balance sheet, which we are going to explain, but let's just give you the foundational thesis. This is the balance sheet. Total assets is sitting over 6.6 trillion. Assets grew. Then equity side of things too. Equity grew. And of course, liability. Naturally, we are in the liability. They're going to return earnings and stuff like that. Then if you look at, there's still, even though not yet liquid, but still improving. So the liquidity ratios are improving. The same thing applicable to the size of your equity to this. There's all these metrics. Then return on assets, of course, grew, and return of revenue grew. Then let's look at finally the cash flow statement before we now start explaining. Then for the cash flow side of things, free cash flow, sorry. For the free cash flow side of things, you will see too that the free cash flow grew to 929.5 billion compared to what it was in the previous year, which was just 710.6 billion. So there's an increase. Sorry. Okay, so let's now dive in. Some of the things. So first of all, there was an improvement in free cash flow. Then the revenue was actually the revenue you are seeing, because sometimes we have the issue of people don't knowing what that revenue is. So the revenue you are seeing is majorly by operation, because like we normally say, there is our revenues that don't come out from operation. There's some revenue that comes from accounting shenanigans, but this one was operation, but it's split between volume and the price. Remember, Nigerian cement industry is still in its oligopoly state. What it means is few guys controlling the market. So we have three market players. The dominant one, the HBM, the BOA, and the Dangote Cement. So that is why when they told you there was a rough split between price and volume. Yeah, so it means in an oligopolistic market, those oligopoly guys can easily increase price, and the average cost of cement in Nigeria has gone up. So in terms of volume, there was an increase in volume of over 11 points. That's volumes of sales, over 11.8% year on year, where you'll be seeing the metric moving from 13.3 metric tons to 14.9 metric tons. So there was an increase. Then the price and the mix play was around 8.6%. So both were commercial execution and not policy driven. So volume and price played a role there. Then in category wise, so you have to know that all the revenue you are seeing geographically, Nigeria is still the predominant market. So Nigeria market covered close to 71.8% of this 2026 half year profits you are seeing. Then the other side, the category we are categorized as Pan-Africa. So the Pan-African arm is what is dropping. So performance of Nigeria has been doing the heavy lifting. So more sales in Nigeria compared to that's profitability in Nigeria compared to the Pan-African good. Then also another play is that there was an increase in the investment they made in their Dangote Cement Production Limited in Ghana. So the investment moved from sub 276 million to over 28.85 billion. So that is a capital injection. They injected a fresh 28.6 billion naira into the that Ghana subsidiary to prop it up. Then, of course, management fee. Yeah, there was a management fee. They paid those fees to DIL, which is Dangote Industry Limited. So, it is incorporated, so they do run some management stuff and they were paid. So the fee they earned moved from 5.51 billion to now 8.01 billion for just 6 months. Then another thing that is also pretty interesting to note is that the free cash flow is just 5.73%. So even though they met the NGS requirement of either you do it by percentage or you do it by total minimum volume being traded, that's 40 billion, right? So they are meeting it from that leg. But from the other leg of maybe 20%, float 20% of your stock, they didn't meet it. So they missed it with the other one. So that is why sometimes people complain of liquidity and stuff like this. Just like we mentioned with BOA too. Liquidity becomes a problem because it is closely held. It is closely held. So that is it about Dangote Cement H1 2026. See you on the next one. So remember to read this thesis going forward. So this is what we pack up. So if you're not reading this, you might not get the full story. Honestly. So you have to read this very well to guide you. So that's why you're seeing here this summary is a Dangote H1 result shows a dominant Nigerian franchise compounding. So that Nigeria The franchise is doing the heavy lifting. So read up so that you understand.